Good morning and welcome to the Morning Bell. I'm Robert, joined by Lizzie and Steve. It's Thursday, May the 7th, 2026, and we're seeing some interesting dynamics in the markets today, particularly around oil volatility and the ongoing AI rally. Lizzie, what are the main themes you're seeing in today's news?
Thanks, Robert. Well, the headline story is definitely the oil market volatility we're experiencing. Oil prices have fallen below $100 per barrel as tensions around the Strait of Hormuz continue, with the US and Iran reportedly weighing a deal to reopen the waterway. What's particularly interesting is that while oil prices are dropping on these diplomatic hopes, Shell just reported climbing profits, specifically because the Iran conflict has been boosting their oil trading operations. It's a classic example of how major energy companies can profit from volatility, even when prices move in different directions. On the corporate earnings front, we're seeing a mixed picture. McDonald's is set to report earnings soon, and investors are watching closely given the consumer spending environment. We also saw Primo Brands fall about 2%, despite actually beating earnings estimates, and that's entirely due to margin concerns. This tells us the market is being extremely selective right now, looking beyond the headline numbers to the quality of those earnings.
That selectivity is really the key word here. What's your read on how the AI momentum is playing into this environment?
The AI story continues to dominate, and we're seeing stock futures rise this morning after a two-day AI rally. What's particularly notable is how companies are being repositioned as AI plays. We're literally seeing a glass company and a toilet maker being marketed as AI stocks, which shows you how frothy this sentiment has become. CoreWeave is experiencing a stunning rally, and now they're facing a prove-it moment with their upcoming earnings. Anthropic's CEO just revealed they saw 80-fold growth in the first quarter, which he says explains their difficulties with compute capacity. The challenge for traders is distinguishing between legitimate AI infrastructure plays and companies just riding the hype. The fundamentals still matter, especially when we're seeing traditional sectors struggle with margin pressure.
So how are you approaching the major indices given these cross-currents? What does the technical picture tell you?
Looking at the S&P 100, we're seeing solid support holding as the AI momentum provides a floor under tech-heavy components. The index is showing resilience despite the mixed earnings picture, and I'd expect continued range-bound trading with an upward bias as long as the AI narrative holds. The Nasdaq is really where the action is, benefiting most directly from the AI rally. We're seeing some of the top-performing Nasdaq stocks trading at valuations that rival or even exceed the dot-com bubble peak, which is a yellow flag for risk management. However, the momentum is undeniable, and fighting this trend has been costly for bears. I'd watch for any signs of profit-taking, particularly if we get disappointing guidance from key tech earnings. The Dow is more subdued, reflecting the challenges facing traditional sectors. With McDonald's about to report and consumer concerns lingering, the Dow is likely to remain the laggard among the three indices. It's trading more on economic fundamentals than AI enthusiasm, which means it's vulnerable to any weakness in consumer spending data.
What does this environment mean for traders trying to navigate these markets?
The key is sector rotation awareness. We're in an environment where you can't just buy the market broadly and expect uniform returns. The AI infrastructure plays are working, but you need to be selective and avoid the companies that are just slapping an AI label on their business without real substance. On the energy side, the volatility around oil creates opportunities, but you need to understand that geopolitical developments can reverse positions quickly. The Iran situation could shift dramatically, and traders need tight stops. For consumer-facing stocks like McDonald's and others reporting earnings, the bar is high. Beating on revenue isn't enough anymore. The market wants to see margin expansion and strong guidance. If you're holding positions through earnings, be prepared for volatility even on beats, as we saw with Primo Brands. I'm also watching the dollar weakness that's accompanying these moves. A weaker dollar typically supports commodities and international revenues, but it also signals concerns about US economic positioning that could eventually weigh on domestic equities.
That's really helpful context for positioning. Now let's turn to crypto. Lizzie, what's happening in the digital asset space?
The crypto markets are showing some really interesting dynamics heading into next week. Bitcoin is in a bullish posture with caution. We saw BTC reclaim the $81,000 level, and it's currently testing resistance as the Iran ceasefire discussions create some safe haven demand. What's particularly significant is that Bitcoin ETFs just recorded a $1.7 billion inflow streak over 5 days, which tells us institutional demand remains very strong. Bitcoin dominance has surged above 61%, which means capital is rotating out of altcoins and into Bitcoin specifically. For next week, I'm looking at a target range of 83,000 to 85,000 for Bitcoin. There are 3 technical signals pointing toward a potential move to $85,000. And the institutional backing through those ETF inflows provides a solid price floor. The White House advisor just mentioned that a US Bitcoin reserve update is coming in the next few weeks, which could be a significant catalyst. On the institutional side, we're seeing BNY Mellon expanding Bitcoin and Ethereum custody services to UAE investors. And Bitcoin lenders are saying institutions want crypto credit products that look more like traditional finance, which is exactly the maturation we need to see for sustained growth.
What about Ethereum and Solana? How are the altcoins positioned?
Ethereum is in a neutral to slightly bullish stance. ETH is testing the $2,400 resistance level, and we've seen accumulators add 246,000 ETH recently, which is a positive sign. However, there are 3 specific reasons why rallies keep fizzling near that $2,400 mark. And until we see a decisive break above that level, I'm keeping my target range at $2,300 to $2,450 for next week. The good news is that institutional demand appears firm. And the same custody expansion from BNY Mellon includes Ethereum, so the long-term setup remains bullish. Ethereum also showed some DeFi resilience when Aave successfully liquidated the KelpDAO hackers' positions, which demonstrates the protocols are maturing. Solana is in a cautiously optimistic position. Sol is benefiting from general altcoin momentum, but it's being suppressed by Bitcoin's high dominance. The key factor for Solana and other altcoins is whether Bitcoin dominance starts declining from these elevated levels. If we see a dominance reversal, that could trigger significant altcoin rallies, and Solana would be a primary beneficiary given its ecosystem development.
How are you reading the institutional versus retail dynamic in Bitcoin right now?
The institutional story is clearly driving the current momentum. Those ETF inflows of $1.7 billion over 5 days aren't retail investors, they're institutions building positions. We're also seeing interesting behavior from mining companies. Core Scientific sold $288 million of Bitcoin in Q1 as they pivot toward AI operations. And Trump-linked American Bitcoin reported an $82 million Q1 loss as the mining industry broadly shifts focus. This means we're seeing some supply come to market from miners, but it's being absorbed by institutional demand. On the retail side, sentiment is more mixed. Bitcoin lenders are noting that institutions want more traditional-looking credit products, which suggests retail is still more speculative, while institutions are thinking about Bitcoin as a long-term asset class requiring proper financial infrastructure. The Grant Cardone news is interesting. He's saying a Bitcoin real estate strategy could outperform REITs, and he's adding more BTC to his treasury, which shows high net worth individuals are also accumulating. For next week, I'd watch Bitcoin dominance closely. If it starts rolling over from 61%, that's your signal that altcoin season might be starting. Until then, Bitcoin remains the safer play with clear institutional support and a path toward $85,000.
Well, Zelgads, that gives us a comprehensive view of where we stand across markets and digital assets. As we wrap up today's Morning Bell, remember that markets are being highly selective right now. The AI momentum is real, but so are the valuation concerns. Energy markets remain volatile with geopolitical developments, and crypto is showing institutional strength even as retail remains cautious. Remember, do your own research and consult with financial advisors before making investment decisions. If you found today's discussion valuable, please subscribe to the Morning Bell so you never miss our daily market analysis. I'm Robert, and we'll see you tomorrow with another edition of the Morning Bell.